While you're reading this disclaimer, don't forget to subscribe, tap that like button, and admire your smile in the reflection on your screen. Hey there, financial traders. Welcome back to the next video in the Trading Basics course. We're going to be going over reading price charts, and if you've learned at all anything about trading before, if you've even seen or heard anything about it, you've probably seen charts that maybe don't have space behind them like this here, but they've got these red and green candles is what they're called, and they've got these long wicks in the candles here is what those are called. I'm going to be going over exactly what they are and how that works here in this video. But before we jump in, two quick things. The first of all, this is again educational purposes only. I am not a financial advisor in any way. So again, seek professional advice when it comes to your own finances. And again, this is educational use only as far as that goes. And next, if you are watching this video on YouTube, click the link in the description. Get access to the free members area so you can get access to all the slides throughout any of my free courses, any PDFs, guides, checklists, you name it, other resources that I have available that are free. They're listed in the back office as well. And then biggest thing, notifications of free live trainings that I do. So if you want to look over my shoulder as I trade, go for it. You'll get notified when you're on our email list when you access the free members area. So jumping in, some of the things that you're going to want to have available is TradingView. TradingView is the software that I use to trade on. But you need to have a broker as well. And again, I trade specifically futures, which again, if you're not sure or understand what futures is and care, I do have a What is Futures 101 course as well. And I use the broker Trade-Evate. And I'm going to have links down below for all this as well. And then finally, my recommended indicator is King's Cloud. This is one that I developed. It's my personal indicator that I used, kind of combining a lot of the strategies that I learned through 5 or 6 different mentors that I've paid a good chunk of money to in terms of coaching, books that I've read, et cetera, et cetera. I'm going to continuously be updating this indicator and potentially even other indicators as well. So again, what is TradingView? TradingView is the software that will show the candles like this. Trade-Evate I picked specifically for 2 reasons. One, it is a U.S. regulated broker. So that way, again, your funds are safe. It's on a U.S. regulated broker where they're not just going to take off and run with it. You can withdraw, no issues, kind of a thing. And then the second reason is because Trade-Evate directly integrates with TradingView. When I was doing Forex trading before and even trading indices on these offshore brokers, I was using a software called MetaTrader. You may have heard of this before. Well, the problem with that particular platform is that couple of reasons. It looks like it was built in like 1996. It's ugly. It's kind of confusing to use. And in order to properly manage the trades the way I teach, especially, but the way that I learned, if I want to learn how big the lot size is, or in the case of futures, like how many contracts I'm going to buy and how much those are worth and how much money I'm willing to risk, I don't want to be pulling out a Texas Instruments calculator, an abacus, a notepad, all these different things, and a Rubik's Cube to try and figure out how many contracts I need to buy to risk X amount of dollars. Trade-Evate directly integrates into TradingView and everything's built in. So it makes life so much easier. I used to have TradingView open on one screen and then another monitor with the other trading software. I'm actually making the trade, trying to see, wait a minute, why is the price different from my left monitor to my right? It was a cluster bleep. I'll just leave it at that. So again, trust me on this. I'm going to make your life a lot easier. Start with TradingView, integrate Trade-Evate, use my indicator. Bar none, easiest way to go. So now, here is what the wicks are. The first thing that you actually need to know about the price action is it's going to show the price moving up and down in various directions. But the candles give you more information in a smaller space on the screen than actually having just a line chart of all the of the price going up and down and everything. So this particular green candle means that the price started low and ended high. A red candle means that it started high and went low. So again, green price went up, red price went down. Now, what do you know? There it is. And here's the next symbols is the open at the start of the time. So again, when you read any kind of a chart, the bottom axis is axis, not access. The bottom axis is time. So reading from left to right, when you're at a candle, the open, the start of that candle, let's say again it's 10 a.m. 10 a.m. Is right here, and again this candle could be a minute or a 5-minute or an hour candle. It really doesn't matter to me. But the start of the time is here. The end of the time is the right side of the candle. So, and because it went up, I know the price started here and ended here. Or in the case of the price has gone down, it started here on the left side and ended down here on the right side. Now, well, what is the wick? That means in between the start and end of that candle, left to right, it means the price in this case had gone high and low and come back all the way up to here. And I think I uggily had an ugly drawing of this all the way through. So again, the price has gone down and all the way back up and then finished here. Or in this case, it started here, went all the way up, all the way back down, and all the way here. So instead of you trying to see all these ups and downs of price movement in that short span of time, the candle allows you to know where it opened, where it closed, and the range of prices and anywhere in between. Now, not all candles are going to have wicks either, all right? So you're going to have something that looks like this, let's say. This means that there's no wick. The price started at the very bottom here and ended here. It just went straight up. There was no indecision. The price was skyrocketing, right? This one, it started here, continued to skyrocket, hit the top of this wick, and then ended right here where these two intersect, right? And then the same thing happened on the next candle. It came in, started, went all the way up here, and then ended down here. But the crazy thing is this actually went all the way up here and then ended down here. And this is actually a little bit wrong. It probably should have had the red starting lower. Put it that way. So it should have started here. So maybe in a split second, it vaulted up here. Again, I'm not going to get into semantics and the fact that I messed up this graph. But long story short, we know that it ranged somewhere up here and finished down here. It actually ended at a lower price. Let's forget the fact that I screwed up the left side of the red candle. Forget that. I needed to fit it all on one page, okay? Forgive me. And then this one, the price started here, went down to as low as here, and then ended here, right? Now look at this one. This is a cross. Sometimes, depending upon if it's just flat with a wick up or flat with a wick down, they're called hammer candles. I really don't personally care the names of candles. People like study candle patterns where if you see these 3 candles in a row, this is what's going to happen next. No, guys, that's just like one little confluence. It's one little possibility. I think a lot of I'm on Instagram all the time and I see download your trading guide where you got to memorize, with flashcards or something like that, all these trading patterns and all these different weird names they have for them. No, it doesn't. That you don't need to do that crap. Again, if you're having a conversation over coffee with somebody and you have to remember those terms so that they know what you're talking about. 1, get a life, and 2, draw it out. You're not gonna it's not gonna come up in conversation if you're able to view exactly what I'm showing here and understand what it means. You don't need to memorize the graphs or the names of any of these candles and patterns and everything. That being said, if you see something where it doesn't look like there's any candle, it means that the price started and ended at roughly the same price. In this case, maybe exactly the same price. Did it fluctuate in between? Yeah, it might have fluctuated depending upon which side which side the wick is on, up, down, or both in this case, right? But then the price ended here, shot back up, and then ended here, right? So again, all these different things considered, it's a good condensed way to know exactly where price is moving up and down. So here's a real price chart graph. We can see the price movement going up, coming back down. This is called a pullback, and I'll go through some of the terms in one of the next videos. Comes up, kind of starts to slow down, comes back down, right? So you're going to see lots of green, lots of red candles moving up and down, wicks where the price is testing higher and then fails and tests back down, tests back higher, down, up, down, and then finally we're able to get solid candles up in this area. You know what I mean? So like you're going to have this tug of war game in between the buyers and the sellers. This is a line graph representation of those candles. Now obviously there's ups and downs, but I'm able to see with candles how the price was tested at these various levels as opposed to just seeing like, okay, that was the closing price. Yeah, it might have been the closing price at that time frame, but where did the price test? Are there more buyers trying to come in, or are there more sellers trying to come in? Is the trend really going up, or is it starting to stall, right? So there's a lot more information that's able to be translated through the candles rather than just a line drawing. The next thing that you'll want to learn in terms of price action and how price is moving on these charts is the general direction or general trend that the chart's moving in. Is it bullish, meaning up, or bearish, moving down? And you'll hear these terms a lot, whether it's trading. You're going to see the big bull out in front of Wall Street and everything, right? So again, that's what it's referring to. So in this case, you can see the general trend. Again, there was some big dips down, but the general trend from left to right is this is moving up, this is bullish. This one you can say pretty much undeniable here that there might have been some upticks here, but the general trend is down, which it means bearish. So again, going back, bullish up, bearish, it's heading down, downward trend. And then finally, price is always moving. There's always a buyer-seller negotiation occurring. If you walk into a electronics store and you're like, man, I really want to buy this TV, but work with me on price, they might not work with you. It's just that one price. But if you come back because you hear there's a sale, there's going to be a much higher chance, I'm guessing, that you're going to buy. So as you can see here in this, like there's prices tested in here, not a lot of buyers, a lot more sellers started to kind of take over the markets. The price of this particular indice, currency, stock, option, whatever it was low enough where a lot more buyers came in and the price shot all the way back up and continued to actually trend up as well, right? So price can have lots of different factors. There's news, what's the general sentiment that's occurring in the marketplace. There's a lot of things that can affect price. I personally don't care a lot about like crazy, there are certain news things that I do pay attention to. I will admit that, and that's one thing that I will check very quickly in the morning when there's financial news specifically in the markets at specific times that can affect trading. Absolutely, you want to know about that kind of stuff. At the same time, I'm going to look at what's happening in the current markets, and it doesn't take a genius to say, there's a plane in a tree. That shouldn't be there. Let's not get involved with that. Stay away from the markets during that. And it's also another thing to say, like, man, there's no waves out in the ocean, so we're not going surfing today, right? At the same time, you don't have to be a professional surfer to be like, oh my God, I'm just gonna grab a boogie board here. I don't have to be a professional surfer, but I can still use these waves and have some fun out on the beach with the family, right? What I mean by all that is if you can understand and see the general trends, regardless of what's happening with this buyer-seller negotiation to figure out what the price is, if you can recognize where a wave is and ride that wave, you can be profitable. And the last thing here I'm going to say is just a wick is a failure of the test of that price. So again, it's testing the price going up. That is a failure of the price. You can start to see sellers coming in, and then a price hit again where a lot of buyers came back into the market. Well, how many buyers? Buyers kept buying all the way up to here, and we tested a higher price. It started to wick and fail, and then the sellers come back in. And then it wicked lower where a lot of buyers were starting to come back into the market. So again, a wick to me is a failure of a price test at that level. And as you can see, when it wicked low here, it went back high. Right? It wicked here, it started to go low again. It wicked here, started to go lower, but ended up continuing higher. Went lower, lower, lower. Tried to wick higher and didn't, went lower again. And then we hit the same level that we were at here where a lot of buyers came in, and what happened? a lot of buyers came in again and brought the price back up, right? So it's recognizing that this is a tug-of-war game. This is not a static thing. Price is always going to be moving. It'll be moving during certain periods of the day more than others because of the volume, the amount of people trading in the marketplace. But ultimately, you've learned plenty in this one video to get you into the next one, and we can actually start talking about some of the more ins and outs as well as trading terms here in the next and upcoming videos.